Okay, let's officially get started here this evening. Welcome everybody. Tonight's presentation is going to focus predominantly on intraday trading strategy, of course brought to you by TheoTrade. Now, a few upfront disclaimers. We are not financial advisors or a broker-dealer. The reason I mention that is, well, my previous 15 years in this business, I not only worked for, but ran the education division of thinkorswim and TD Ameritrade. You know, I will use the thinkorswim platform just once or twice tonight. It is not essential to be on thinkorswim in any way, shape, or form for anything that we're going to discuss tonight. The other copyright disclaimer, well, this says don't duplicate this without the express written consent, of course, of TheoTrade, the National Football League, and there's our address, obviously, here in Scottsdale. A little bit about me. My name is Don Kaufman, the co-founder here of TheoTrade. I've been an options strategist, but, you know, when I first started in this business, I started in the late 90s in Chicago. I come from a family of traders. I was a derivatives risk manager at about a 19-year trading career. And yeah, I do have 17 years of thinkorswim platform experience. About 2 years into my career, I was invited into a startup brokerage firm that was called thinkorswim. thinkorswim was eventually acquired by TD Ameritrade. I remained there pretty much my entire career, so a 15-year career, and built the education division, of course, of thinkorswim, then ran education of TD Ameritrade and their 7 million clients. I've done the CNBC tour over there. I just like this saying. I mean, listen, if you're going to get pitted against somebody on CNBC, make it him, all right, which is Mr. Wonderful over there. This is actually when we did this, Apple was trading in about the 130 realm. Apple traded all the way down to $89. I was the short, he was the long, so it worked out. Then again, Apple right now, you know, 140 plus all-time high, in fact, today. In fact, one of the stocks we're going to discuss today is going to be Apple. Here's a little bit about TheoTrade. So what do we do here at TheoTrade? We specialize in education for options, futures, and stocks. We're founded by professional traders and trading educators. Everybody here that does any trade instruction whatsoever at TheoTrade has a minimum of 15 years of experience, several with many decades. TheoTrade, I mean, we're here to help you mitigate the risks of the market. And everybody is, you know, like, let's make money, let's make money. First and foremost, we do talk about risk mitigation while really learning a skill set. We do a tremendous number of courses. Tonight's presentation, I think you guys really enjoy. And, you know, more than what is a TheoTrade, it's who is TheoTrade. So TheoTrade is not just myself, again, Don Kaufman. We actually have Doc Severson, who's involved heavily in stocks, options, and technicals. Jeffrey Bierman. Jeff actually worked with me at both thinkorswim and TD Ameritrade. He's kind of my market technician. He was also the chief market technician for TD Ameritrade, predominantly traded stocks, some options, and ran a hedge fund for a number of years. We also have on board Steve, better known as Slim Miller, who's got a lot of experience, 43-year veteran of the Chicago Board Options Exchange, stock futures trader, and of course, the last but definitely not least, Tony Rago. Tony is our in-house Nasdaq Futures and intraday strategist. So that's just a little bit about who is TheoTrade. So what we're actually going to talk about tonight, and what you are going to learn in tonight's presentation. First and foremost, how to generate high probability outcomes with intraday trading setups, how to select the right options for intraday trading. Okay, this one is of critical importance, how you can be right less than 50% of the time and still receive consistent trading results. Think about that for a second. We're going to talk a lot about, when it comes to trading, we're going to talk a lot about trade logic, why intraday trading does not mean you have to be glued to your screen all day. So we're going to look at some setups for intraday trading where you can walk away. How is that possible? Because we're not going to put you at extensive risk. And how to circumnavigate day trading margin restrictions with various alternatives. Dun, dun, dun. Everybody's worried about, I don't have $25,000 minimum in the account. I get it. I spent 15 years in the brokerage industry. We have learned how to circumnavigate day trading margin restriction using alternative products out there. So again, if you don't have the 25,000 in your account, that's the day trading margin regulation. We'll show you how to circumnavigate a little bit about this. I mean, these last two are critically important. I don't want you to sit in front of the screen for 6.5 hours a day. I've been doing that. Now, a prelude to what I call dawn and market direction. Tonight, we're going to focus, okay, on what? Creating directionally biased trades, right? We're limited to an hour. This free online seminar is designed in effort to impact your approach to trading the markets. If you've got skin in the game, or if you've traded in the past, many of the examples used tonight are going to resonate. So I spent 15 years looking at retail and professional client accounts, and a lot of the skill set that I'm going to talk about tonight comes from where traders are effective and where they need work. So that's one of the things I'm going to cover right up front, right here, right now. So let's jump into it. A few TheoTrade principles to begin tonight's presentation. So again, tonight we're going to focus predominantly on intraday trading setups, right? And usually when people are like, okay, intraday trading setups, let's get to the chart. First of all, back up, all right? It's critical to distinguish for effective trade performance. It's got to be based on these three factors. And I always want to stress this, and I'm going to, highlight this. Trade logic, trade logic, trade logic. What does that mean? I'm going to show you here momentarily what it means to have trade logic. Number two, capital allocation. Now, capital allocation, frankly, tonight, we're not going to have a tremendous amount of time to talk about capital allocation tonight. We're going to focus on trade logic, okay, and directional bias. Directional bias, what does that mean? It means we got to look at something and figure out what is the market likely to do on an intraday basis, okay? And I always say, obey the rules out there. So let's get into it with trade logic first. So trade logic. Well, how you approach trades is vastly more important than being right or wrong in the markets. So I just can't stress this enough, right? How you approach trades is way more important than being right or wrong. People always look at this like, well, follow the bouncing ball. It's red and green flashing arrows. Which way are we going to go? How many times have you been right directionally but have still lost money in a trade? By the way, these are not rhetorical questions, okay? There's over 1,000 people joining us tonight. Let me know. I mean, how many of you guys have ever been right in a trade, but maybe you got stopped out, first? Recall, stop is a 4-letter word, okay? Nobody here has ever been right but still lost money in the trade. If you traded options, fine. You traded futures, fine. You traded stocks, fine. Everybody's done this, okay? You get stopped out of it. Well, we're going to put a little bit of an end to that. So moving right along over here, tonight's trade logic. The first step, before we go in and we really want to start talking about intraday strategy, before we can do that, you have to define the strategy. You're like, again, a strategy, it's not like go in there and like, look for the breakout, look for the gap print higher, look for the MACD to cross this level. Forget about that. That has to be secondary. You got to ask yourself in every single trade, if I were to do this trade 1,000 times, what would be my outcome? Just time out for a second and think about that. If you did the same trade, 1,000 times, okay? Because many of you are what, I love this phrase, and hopefully nobody's offended by this, but many of you are directionally challenged traders. You guys heard that one before? I should coin the phrase. Directionally challenged traders can still perform if given the correct trading logic. Think about that for a second. When I talk about like being right like 1,000 times or doing a trade 1,000 times, there's no joke, okay? Everything you do in the markets, you have to do it again and again and again and again. It's about a number of occurrences. You may never trade 1,000 times. That's fine. Hopefully you do trade 1,000 times. But even if you don't trade per se 1,000 times, okay, maybe you do it 100 times. What's your outcome going to be after trading 100 times? And the irony of this, nobody ever seems to answer. And again, we've got two different chat rooms set up over here. We're broadcasting, into GoToWebinar or broadcasting into, another room over here. And nobody ever answers that question. I don't know what my outcome is going to be. You have to know that. Intraday options and trade logic. In order to create a viable intraday trading strategy, we shall employ the use of options, okay? So why am I doing that? Well, it's because we're using a defined risk option strategy as the trade will not have to be monitored the entire trading day. So we're going to go out there and we're just going to define our risk. We're going to say we have X amount of risk. Why? Because it translates, you don't have to sit in front of the screen all day. I do this all the time. I'll go out there and, do something, which I'll show you here momentarily. And I do watch the screen throughout the course of the day because, well, that's I live and breathe markets for the past, it's almost 20 years now. But you don't necessarily have to be glued to the screen all day, which brings up a point. I know this question always comes up. Can you do this off of like a mobile device? Of course, you can trade off a mobile device, all right? As long as your eyes are pretty good, or you have to have a bigger mobile device. So if you have absolutely no options experience, do not have cause for concern. I'll take you through a very, very basic options example. And for those of you, listen, for those of you that have a bit more experience, you understand options, hang out a minute, because again, we're going to jump right into this trade logic here momentarily, but it's important to get everybody at least moving in the right direction. So again, in order to create a viable intraday strategy, you got to use the options. Okay, we could do this with stock. We could even do it with futures contracts. But options are going to be the great equalizer. Options are going to allow us to not have to use things like stop orders. Options are going to allow us to be able to walk away from the screen. And again, there's a lot of different ways you can employ this strategy. With that, let's get to some of the basics of options. Options basics explained. Well, for this, I got a blank screen over here, right? Oh, I'm going to make myself the John Madden of the markets. I'm actually going to draw on the screen over here. This could be any stock out there. For a number of years, every stock I have, it's called. We're actually going to make this. Okay, the stock is called stock. So this is a stock, and let's say the stock is trading right smack at $100. So you have a stock and it's trading at $100. Well, if you go out and you purchase that stock, and again, even on an intraday basis, okay, where could this thing go? All right, so stock, where could it go on an intraday basis? It obviously depends on how wild, how volatile a product happens to be. But, I've seen stocks on an intraday basis gap down, for instance, to 95. I've seen them gap up $5 to 105 over here. So the variance, okay, on an intraday basis could be quite substantial. All right. So instead of just trading the outright stock, not to mention the variance could be, substantial. Think about the amount of capital you're tying up there. You're tying up $100 per share, which is going to be a little bit limiting. If you have, for instance, $2,000 in your account, you're probably not going to go out and buy a $100 stock. Okay. You'll also trigger, of course, the day trading margin rule if you trade it off him. So once again, here's the stock and it's trading 100. Instead of going out and buy the stock, in this particular case, we're going to go out and I'm going to use what's termed an at the money option. All right. We're going to go out and we're going to consider buying a 100 call. Now, just for my own curiosity over here, how many of you have some options experience? Now, again, there's about 1,000 people total in here, and it's okay, all right? So, all right, a lot of people are coming back, yes, 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 me. By the way, it's okay. You can say, like, I have absolutely no options experience whatsoever. So you're going to buy a 100 call. And I'll talk about the 100 call here for just a moment, and we're going to pay, all right, approximately $2 for this option. That's $2 per share. Okay, so we're going to buy a 100 call. What does the 100 call give us the right to do? Gives us the right to buy the stock where? At 100. All right. Now, I want you to keep in mind that this trade is only going to be, quote unquote, intraday. Now, what does intraday mean to you? Well, to me, it means you get out in every case by the end of the day. So if you're buying a 100 call, you have no intent of actually buying the stock at 100. Why are you buying the 100 call for $2? Because you hope that that $2 appreciates in price. Okay. Now, again, buying a 100 call gives you the right to buy the stock at 100. If you buy a 100 call, you have the right to buy the stock at 100. Where would you want the stock to go? Well, if you buy a 100 call, you want the stock up here. What's up here? To 200. Yeah, it's probably not going to go to 200 in one day, but let's say the stock was capable of getting, for instance, to 102 that day. You buy a 100 call for $2. Okay. Ultimately, the product gets all the way to 102, and you're going to be like, oh, what do I make? Okay. What do you make? Well, on an intraday basis, okay, this $2 will, again, it will appreciate. It will appreciate by how much? Okay. Now, this can get a little bit crazy, but do not look at this 100 call as necessarily moving dollar for dollar with the stock. Okay. What that means is if the stock goes up $1, will this option increase by $1? No. This option will increase, okay, by about 50 cents, okay, for every $1 move in the stock. So think about this. If the stock goes up $1, the option goes from $2 and we'll go to $2.50. Okay. If the stock goes up $2, again, we're going to do this on a nice linear basis. Let's say it's another 50 cents for another $1. Okay. Then the option is worth $3. Okay. So you've actually got this option that you purchased for what? For $2. By the end of the day, if the stock actually goes up to 102, that option can go from $2 and literally be worth $3. You're like, oh, that's on a percentage basis. This is a big return. However, okay, the opposite could also be true. What happens if the stock doesn't go up? What happens if the stock goes down? Ooh, what happens if the stock goes down to 98? Okay, well, the same will be true. You could actually lose money. How much would you lose? Well, the option might go from $2. And again, if the stock went down to 98, let's say the option is worth $1. So in this particular setup, I wanted to keep it clean. I wanted to keep it easy. And again, there's a lot going on the screen, but clean and easy. If you're right, okay, and the stock goes up $2, you're going to make $1. If you're wrong and the stock's going to go down $2, you're going to lose $1. Okay. Where's the edge in that? There isn't. But now I'm going to take you into a real logical options example. A real logical options example. And again, I'm keeping this nice and easy for those of you that have no experience. Remember, 100 call. What does it give you the right to do? It gives you the right to buy the stock at 100. Do we have intent of buying the stock at 100? No, we have no intent of buying the stock at 100. We will be out of the trade by the end of the day, okay, regardless of what happens. Okay. Now, let's show you some real option pricing. Okay. So we're going to move forward from here, and we're going to go options, logic example. In this example, you buy an option on an intraday basis. This means you bail out prior to day's end in every single case. The big question, which option do you buy? That's always the question that you should be asking. Oh, I need to know what option, okay? Which option? Because risk versus reward is critically important. Now, the previous example, what did I do? I set up like a risk 1 to make 1. That's what I originally set up there, risk 1 to be able to make 1. You're like, well, guess what? I think we could do better than that. Like, again, which option do you buy? That's what, what people are actually in the chat room right now. They're like, how far out do you go in timing? Do I do this option? Do I do that option? What delta do I use? Okay. 100 trades later, or even 1,000 trades later. In this scenario, you will need to create a trade setup whereby we could be right 50% of the time and still see a degree of profitability. Now think about that, right? In the aforementioned example, we're basically risking 1 to be able to make 1. If you risk 1 to be able to make 1 and you're right 50% of the time, now why do I talk about being right 50% of the time? Okay, remember, when we talk about this tonight, what's the first thing you got to worry about? When we go back to those TheoTrade principles, the first thing you worry about, trade logic, trade logic, trade logic. What's the second thing you worry about? Capital allocation. What's the third thing you're going to worry about? Directional bias. Why? Because I can do a lot of things right, but you can still screw up direction. I want you to know that now, because everything you're bombarded with in this business, everything everybody bombards with you. Follow the bouncing ball. It's a MACD. It's a Fibonacci. It's a Bollinger Band. They have proprietary, studies. We gave you a proprietary study prior to this evening's presentation, okay? Because the keys to this tonight aren't just about like, well, let's be right. Sure, I think I can actually make you more effective in being right. But first, you better set up the right trade logic because you're not always going to be correct with directional bias. If you could do 100 trades, be right 50% of the time, and still have some positive outcome, still come out ahead, does that interest you? Anybody? Anybody? Okay? Think about that for a second. If you could be right 50% of the time and still come out ahead, does it interest you? Of course. That's what you want to do. Now, this is going to get a little bit more in depth. This, ladies and gentlemen, it's the spiders. Okay? And I actually took this screenshot today. I had a nice presentation ready, but I took the screenshot today because I wanted to make a point with this. What you're looking at here is the spiders. What are the spiders? The S&P 500 ETF. Now, I could have used Apple. I could have used, the Russell. I could have used the SPX. I could have used Facebook, Tesla, you name it. But I chose the spiders because it's one of the most liquid products in the known universe. And here, the product itself, when I say product, I just mean spiders. The spiders themselves are trading for, $235.20. They're trading for $235.20. And I have gone out and we're going to buy, and again, I want to elaborate upon this. We're going to buy, not sell, buy the 235.50 calls just for 37 cents. No, again, time out, 37 cents. If you do one contract, because options trade in contracts, they don't trade in shares, one contract will cost you $37. There's nobody that's on tonight that couldn't afford a $37 trade. And here's the other interesting irony. If you go out, and you do this, you don't have to have special like tier 2 margin approval. You can have just tier 1. You can buy a call or buy a put. For intraday trading, you just buy a 37 cent option. You're just going to buy a 37 cent option. And I'm like, oh, okay. Why? What's the most you could lose? 37 cents, right? So we're going to buy a 37 cent option with the underlying trading at 235.20. Okay, let's continue from here. So you can see the exact price, by the way. So we're all clear. 37 cents at the time of this screenshot, okay? You're pretty much guaranteed to fill there. Why? The bid is 36, the offer is 37. Just buy it on the offer, 37 cents. Done. Filled. Okay, moving along. What's the most you can lose? Well, 37 cents. So the spider is trading at 235.20. Now, this happens to be a bullish example. Again, I elaborated upon that, right? SPY intraday bullish example. Could I have done a bearish example? Of course. No, I wanted to do a bullish example because I believe that it's easier to interpret that way. People get kind of confused with puts. They're like, I bought the put. Does that mean I bought the right to sell? Oh, no, I don't know what it is. Get it? It's a little confusing. So I'm just using a bullish example for the hell of it tonight. In this example, we bought the 235.50 calls for a 37 cent debit. Our maximum risk is 37 cents. That's it. If you do one contract, it's 37 bucks. You do 10 contracts, it's $370. What are the 235.50 calls worth if spider moves up $1? Dun, dun, dun. This is the ultimate question. Got to be able to answer this. What's the 235.50 call worth if the spider moves up $1? What's the 235.50 call worth if the spider moves down $1? You got to look to both sides. See, in here, is there directional bias? No, there's no directional bias whatsoever in there. All I want to know, what happens if we go up $1? What happens if we go down $1? You're not seeing anything about charts just yet because I'm going to get to that. That's the second half of tonight's presentation. Now, let me show you. Here's the exact same screenshot. And what I want you to see, if the spider moves up $1, okay, the option will be worth 96 cents. If the stock moves down $1, the option will be worth roughly 9 or 10 cents, right? So what I did is I looked at the 235.50 call. I looked at this 235.50 call and I said, what's it worth if we move up a buck? So to figure out what a 235.50 is worth, if the stock moves up a buck, look at the 234.50s, because this option becomes this option if this stock moves up $1. But what happens if we move down $1? Well, the 235.50 call becomes the same as the 236.50 call, okay? Which means it drops in price to about 10 cents. So that's minus $1. So what I'm doing is I'm actually pricing the future. I'm saying, what happens if we go to 236.20? Or what happens if we go what? You know, I don't care. What happens if the market goes to zero? If the market goes to zero, think about that for a second. Think about it, okay? Now, you want to see exactly what happens? Again, we paid 37 cents for the option. If the spider moves up $1, we're going to gain 59 cents. If the spider moves down $1, we're going to lose almost the full 37 cents. We're going to lose 27 cents of it. Now think about that for a second. If we move up a buck, we make 59 cents. We go down a buck, all right, we lose 27 cents. Now assume you're correct 50% of the time. Still have edge in here. Yes, even after commissions. People always ask me about, what about commissions? For those of you, if you're into TheoTrade, okay, and we'll talk about this later, we do have negotiated commission structures with brokerage firms. That's all I will say. We have negotiated commission structure with the brokerage firms that will make commissions really very much a non-factor. Commissions are commoditized these days. But again, let me go back one slide over here so we're all clear. Again, the option would jump, okay? This option would jump from 37 cents to 97 cents, okay? Or the option goes from 37 cents to 10 cents. That, okay, that's where I come up with, you're going to make 59 cents, so you're going to lose 27 cents. You realize even if the spiders literally crashed and burned that day, you're not going to lose more than 37 cents. Time out. Why doesn't everybody do this? Okay. How easy is that example? It's pretty easy. I just pulled it out today of the marketplace. Every single day, these trades are going to present themselves. But very few people go after this because they don't understand the logic and the right options, okay? The trade logic implications, first of all, they're huge. In constructing any intraday trade, your option selection, it's imperative that you get this right. Think about the implications of selecting a strategy that can provide a degree of edge in the markets before we have discussed direction of the markets. Long live trade logic. It's always first and foremost. Okay? And somebody actually asked a great question. So, and I don't mind answering this. Why is it a non-symmetric move? Okay? Why is this a non-symmetrical move? It actually has to do with something called delta. Delta is the rate of change of option for every dollar increment move in the stock. Okay? The delta of this at-the-money option is almost 50 cents. The delta gets steeper as we go in the money. The delta gets more shallow as we come out of the money. Moreover, okay, what it really means is when the option goes in the money, it trades at almost a one-for-one rate with the stock. Yet we only have 37 cents at risk. Okay? Options afford us the ability to be able to do this, and it's not quote-unquote symmetric. Again, when you're capable of making more, losing less, this is a good thing. Okay? Get edge. This is why so many options now trade, okay, on an intraday basis. So again, long live trade logic. I love doing this. All right. You guys ready to move on? Everybody okay over here? Okay. By the way, volatility has almost no impact whatsoever. I know somebody questioned that about options. There's no impact to volatility. You didn't pay attention to which option I lose, did you? Right? Just making sure that we always like to do a little bit of timeout. Make sure you get what trade logic means. What does trade logic means? It's the implication behind strategy. Strategy is not just about being right or wrong directionally. Okay? Strategy is really about having the right mathematical setup for the trade. And that's what we do. All right. All the good questions in there. Now, ladies and gentlemen, we move to part 2. Directional bias. Dun, dun, dun. Finally, let's approach a directional bias. That's what people are really here for, okay? More often than not, people don't really get into like, oh yeah, I get it, option strategy, yada, yada, yada. The greatest thing about having 37 cents at risk in the previous and aforementioned example is that you can walk away from the screen. I don't think you're going to be sweating over 37 cents of risk. And that's the most important thing. If you can think clearly in a trade, you're going to be fine in that trade. But directional bias. I'm not going to discount directional bias. You know why? Okay. If you're right more often than you're wrong, you're going to make more money, period. There's no if, and, or, but about it. Okay? No if, and, or, but about it. If you're right more than you're wrong, you will make more money if you have good trade logic. This is what I call the quant's guide to market direction. First of all, I should let everybody know, and I didn't up front, if you're brand new and you've never been to one of the presentations that I do, I am actually referred to as a quantitative trader, or quant for short. It means trader math geek, okay? Any strategy that I present is going to have some mathematical logic to it, and it's going to be based on probabilities and outcomes. Like, I don't care about like red and green flashing arrows. Listen, I will look at a chart, all right? But that's not my mainstay. I'm not going to make a decision just based on, a red or green candle out there. Quants just do not typically rely on charts and studies, but rather on probabilities, relationships, and seeking statistical edge in the markets. One of the first things I just showed you tonight with the options side of it, it's all about statistical edge in the markets. But if you're not familiar with this idea of a quantitative trader, and again, quant is such a buzzword, okay? After the movie, The Big Short, everybody's like, quant. It's the math geek in the corner that doesn't usually come out and talk, right? But again, I'll be going over throughout this presentation why and how quantitative analysis will really become kind of your best new friend. And I kind of grew up around like quant traders out there. So markets speak volumes. Trading for you needs to be about reading into market relationships, right? Reading market relationships can help you construct probability-based outcomes on an intraday basis. So people don't typically think of this way, but what I'm saying is, well, the market speaks volumes. Guys, ready? Let's go into an actual example over here. The apple of my eye. By the way, I absolutely love that picture over there. It's quite disturbing. It exemplifies, well, a little bit about me. Here's another kind of perfect example. Imagine you're trading Apple on an intraday basis. Imagine it. How many people here have ever traded Apple on an intraday basis? People admitting it is the first step today. Okay? Huh? Anybody? Apple on an intraday basis. Hey, listen, I give a couple seconds. All right? No. Apple's A-okay. By the way, I'm a equal opportunity trader. I will literally trade anything. Stocks, options, futures, Apple, Facebook. Okay? And by the way, here at TheoTrade, you cannot talk badly about a stock unless you're short that stock. So if you mention the word Snapchat, I can officially say I am short Snap because I like to talk poorly about it. But imagine you're trading Apple on an intraday basis. You have a nice bullish setup and going to go long the stock. Forget even about options for a second. We're just going to talk about long the stock. Sure, you can stare at a chart on Apple. But did you think to yourself, what other factors will influence the outcome of your Apple trade? Again, think about that. You're staring at an Apple chart throughout the course of the day, right? You've got it pegged down. It's an Apple chart, an Apple chart, an Apple chart. But what other factors are going to influence the outcome of your Apple trade? Intraday setups and strategies. The following trade setup on Apple is a quintessential breakout on all-time highs. Now we're going to actually review the chart setup. I had to look for this one too. The chart crossing through the old Apple insignia over here. So think about this for a second. People talk about this all the time, Following the Apple trade, it's quintessential breakout on all-time highs. What type of a trade am I talking about? Well, let me show you. Okay. This is just the other day. We'll come to time frames and when this is, right, in just a moment. When I say it's just the other day, what you actually had here, this is the previous day's close. Okay, you guys with me? It's previous day's close. That previous day's close was right in this neighborhood here. It was about $141.43. That's the previous day's close. Apple actually gaps higher at the cash open. Cash open means ding, 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 the bell goes off. Gaps open. Where does it open? Right in this neighborhood. And by the way, this is a 1-minute chart. The thing moves up, okay, and rips higher at the cash open over here. Now think about that. It's wildly bullish, right? Stock, it's again, it's kind of that quintessential gap from the open. You guys with me? All right. By the way, this wasn't earnings. This was literally just the other day. So there's no earnings over here. This is just a gap higher. Again, this is, as I mentioned earlier, that, here, I'll actually show you. It's a breakout on all-time highs. It's like the quintessential trade that people look for. The gap higher, okay? Now you're really going to like this. Apple cracks to an all-time high and appears to be breaking out to the upside. That print right there, if I had the chart zoomed out, you'd even see this. This print right here is Apple, okay, at an all-time high. Apple at an all-time high over there. All right. Now, here's the question. Now, again, this is, these are not, subjective, obviously, but they're not rhetorical questions. Jump in here. Are you ready for your ancient strategy? You see Apple gap higher, okay, prints to the open, goes for an all-time high. What strategy might you employ to take advantage of Apple, okay, intraday breakout to new highs, okay? What strategy might you employ to take advantage of Apple intraday breakout to new highs? Anybody? Anybody? Okay. Again, intraday. Oh, there's a ton of different questions over here. Things breaking out to all-time highs over here. I like this. The answer is stop everything. Oh, hold on. I love it. I love it. People are like, oh, I want to do this. I want to do that. I want to do this. Okay. Why do we want to hold everything? Okay. Let me show you exactly where we've gone massively wrong in here. First and foremost, again, hold everything. Did you check the bond market before entering into the Apple intraday trade? Did you check the bond market? Have you viewed the volatility futures? What was the Russell doing at the time of Apple breaching into new highs over here? Apple was smoking hot. What was the Russell doing? And the Nasdaq, please tell me you were checking the Nasdaq at the exact same time. Okay? One thing that has driven us crazy over years, people are doing what we call myopic trading. Are you guilty of it? Are you guilty of being a myopic trader? Sorry to tell you. But while you were focused on Apple breaking out to new highs, you missed the trade opportunity. Apple's actually poised to sell off hard within minutes. Myopic traders are those focusing on one product and fail to see the larger probability of an impending sell-off. Don't worry. Happens to everybody. There's a cure for this, okay? The point that I'm making over here is every time I've gone to different trade shows and I watch other webcasts out there, everybody's like, look at Tesla, it's breaking out to all-time highs. And who the hell cares what Tesla's doing? Like, oh, look at Apple. Oh, it formed the perfect formation. It was a head and shoulders and a breakout. It was this, it was that. Are you kidding me? Okay. That's looking at one chart. One chart doesn't drive the market. Let me show you what does drive the market. The myopic cure. Enter the intraday setups. First step in intraday trading. Looking at any one product should be the death of an intraday trader. It literally will be the death of you. You cannot look at one product. You cannot focus on one product. Myopic traders fail to see the markets move in relative cohesion, and I'll show you what that actually means. What this translates to is if you watch one product, you fail to see the bigger picture of the market. The intraday setups used properly, okay, will keep you from tunnel vision. It just takes off the goggles over there. And Apple ultimately ate you for lunch. Back to our example here and the dangers of myopic trading. As you're glaring blindly, okay, at an apple, You failed to notice the bonds are rallying. The volatility futures are being bought heavily. Oh, I mean, everything that day is screaming to get short. What do you think this translates to? Literally, what do you think it translates to? Okay. You translate to Apple upside down. Apple ate you for lunch. What appeared to be a breakout to the upside, and it was that quintessential breakout to the upside over there. If you just looked at one chart, this is a chart setup that's supposed to be bullish. But if you looked at the one chart, you were buying it hook, line, and sinker over there. Again, what appeared to be a breakout to the upside was an excellent short opportunity based on probabilities in the markets. We were short. Where were you? That's right. I led you down the path that most traders are going to take. Now, here's why you should have shorted Apple. For the record, I did short Apple. It's March 21st. That was last Tuesday. That was a big sell-off over here. And in this particular case, I did happen to use the stock. Okay, I did actually use the stock in here. You can see my execution time. And by the way, this is Pacific time, so I shorted it at 7:53. Okay, and I closed the trade 15 minutes, about 15 minutes prior to the close. So 1 p.m. Okay, Pacific time is actually the close. 15 minutes prior to the close over here, we shorted. Okay, at 142.7. Okay, and bought it back at 140 in change. That short, it paid us, and nicely. So, you know, what was the path? Why did we actually short Apple? That's the real question. First of all, the Nasdaq Futures. Nasdaq Futures hauling, they were just getting hammered, falling hard minutes after the cash market opened. And again, when I say cash market, what am I talking about? Right down here at 6:30 in the morning, okay? Nasdaq Futures out of the gate. This is actually the indicator that we provided you. What is the indicator? Well, it's the quad indicator. What did it actually do? Heavy yellow candles indicate confluence and sell-side activity in all four metrics. What are the four metrics? It's the ticks. It's the advanced decline line. Okay? It's the breadth over here and the candle itself. There are four common metrics. We're not looking at the tape over here and going like, I think it's going to sell off. It's ultimately showing us confluence, confluence, confluence. Okay? Sell-side activity in all four metrics. Yellow means you have confluence of all four simultaneously, and they're all, again, quantitative indicators in here. We're looking at advanced decline line, numerical, quantitative data, numerical, the breadth, numerical. Okay, the candle itself is the only thing, okay, that has to actually be measurably lower. Once again, quantitative data on there. So the Nasdaq futures, they were getting hit hard, but that's just some quantitative data. That's not necessarily going to do it for me. Number two over here, volatility futures. Okay, the volatility futures, they were tearing to the upside, providing further evidence risk is imminent. So if you take a look at the volatility futures right out of the gate, okay, here's the cash open right there. Volatility futures, boom. I mean, this is it's a monumental move. It's screaming that the market's going to sell off. It's well before the market actually sold off. Last but not least in this particular setup, the bond futures. Dun, dun, dun. Oh, this was a fun one because the bonds, they were actually, look, this is 6 a.m. This is a half an hour before the open. At 6 a.m., the bonds were already ripping. The bonds are ripping up, okay? Everything is screaming, risk is imminent, risk is imminent, risk is imminent across the board over there. What we're actually doing is creating a probability-based outcome for you. Even intraday trading is based on probability-based outcomes. Via looking at select products, you can create a higher probability outcome for intraday trades. Let's review a few products that can allow you to create viable intraday probabilities over here. And this is what a checklist might look like. Now, you have to get comfortable with where is everything supposed to be. For example here, okay, bonds, what are they doing? Advanced decline line. Which advanced decline line? Volatility futures, Nasdaq futures, S&P futures, financials, energy sector, okay? If you know the correct products to watch and what to look for, you can create a probability-based outcome and an incredible, viable intraday setup. It's massive to be able to look through this. And again, all I've listed here is just a handful that's right off kind of the cuff. I mean, these are, you know, for the most part, a lot of people probably look at these. But what specifically are you looking for? Now, I'm going to deviate just a little bit for you, okay? Because in this intraday checklist, and this is where I want to deviate for a minute, I'm going to take you into a live market environment over here. This happens to be my own watch list, okay? And when I say that you want to create a bit of a checklist, first and foremost, many people don't even understand, if you can't see futures, you can't even see the marketplace. This is what drives order flow, the S&P 500 futures. Why are they so imperative? Like, why are the futures so imperative? They move the entire S&P 100. So the way to actually construct this in your mind, okay, here is the S&P 100. Whatever these futures do, whether they go down, whether they go up, they will drive every stock in here, okay? And this all works through a system, okay, it's called statistical arbitrage. Is that a big scary term? What it basically means is a bunch of quant traders that have figured out mathematically how to move every stock out there, okay? And that's what they're doing. Oops, I got a green screen over here. So they have actually figured out how, literally how, to move every single stock in the S&P in accordance with what the S&P 500 is ultimately doing out there. Now think about that, right? And think about the logic behind that. So again, every single stock is moving with these futures. The futures start ticking up, the stocks tick up. The futures tick down, the stocks tick down. And it's going to drive trade. What also drives trade? Well, the volatility futures, it's going to drive the bonds over there. If you know exactly what products to watch, you get a much better probability on an intraday basis. And again, when it comes to probabilities on an intraday basis, how do you do this? Okay? Well, if you were to look, for example, at 10 different things on the screen, okay, and those 10 different things all pointed towards being bullish, is that a better outcome? Think about it. Is it a better outcome? If you have 10 products and all 10 products say, we're going to be bullish today, it'll provide you an outcome and a positive outcome. However, on the side, you still have to know what options to trade. You have to know how far out in time to go. You have to know exactly when to employ that particular strategy out there. And that's what we really do. These are key factors to intraday success. Here's the key factors we discussed this evening. Number one, you must employ a viable trade logic. All right, we talked about that, like the 37-cent option out there. If you risk 37 cents, that's the most you can lose, 37 cents. But if the position goes a direction, okay, you know, you can technically make dollars with 37 cents at risk. Number two, primary, again, key factor in intraday success. You got to use a multitude of quantitative indicators that can really assist you in creating a higher probability intraday setup. And again, we gave you an indicator to get you started on the right track over there. Here's an indicator. And when you're like, oh, what are these blue? Okay. What are the blue? Well, the blue ultimately, when there's a confluence, what does a confluence mean? The ticks are up, the advanced decline line is positive, the breadth is positive, and the candle is positive out there. But there's much more to it. There is much more to it over there. Is the right trade logic coupled with quantitative approach to directional bias what most of you guys have been looking for? I mean, again, this is very different, what I'm presenting tonight. And I've never put a class together about, okay, directional bias with a quantitative approach, because it's hard to actually go through to, you know, exemplify my own quantitative approach. But, you know, first of all, fear not the intraday trade. You may not know options or have limited experience in placing option trades, but again, using options are going to be a key factor to the logic. We can show you how and when to place intraday option trades in a matter of a few hours. What we do here at TheoTrade is just create detailed recipes for every strategy, including the intraday trade. And the way I always think about this, like when it's a recipe, it literally is a recipe. And again, as I was mentioning in the previous slide over here, I never put a class together before on a quantitative approach. There's a tremendous amount of detail to the recipe over here, and I have been spending inordinate amounts of time doing this. You know, you wouldn't bake a cake without a recipe, so don't trade without one. And everybody always says, why doesn't everybody do it? First of all, everybody has the right questions over here. You know, here's what you need to know. What stocks do you do this on? Okay, that's kind of a big question. What stocks do you do this on? Well, I showed you the spiders. Obviously, you know you can do it on an Apple. How do you determine whether you're bullish or bearish? We have to use that subset of quantitative indicators. The bullish or bearish is obviously a key portion of the directional bias out there, right? You want to know, are we going up or are we going down? And on the intraday basis, using a number of indicators, we can do that. And again, they're much more mathematically oriented. What expiration do I select? What strikes do I use? And if you're getting into the options, you need to know expiration, strikes, position sizing, 1 contract, 2 contracts, 3 contracts more. What's the correct probability for each trade? How do I execute the trade? When do I exit? What do I do in a losing position? Well, if you have 37 cents, it's not that bad of a losing position, is it? And that's what we do here. Criteria. It's what we do at TheoTrade, okay? Trading's all about answering the what ifs. Again, the right stock candidate, the correct options, how much capital do you commit, the right stock options, do I buy? What about intraday margin restriction? Now, I promised, I alluded to this earlier, and I promised I would tell you, intraday margin restriction. How do you get around it? Circumnavigate it. Now, you guys may know nothing about this, but there's a product called the S&P Futures, the ES Futures. Did you know that there's options on these futures? And did you know that these options coming to April, dun, 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 in April, they're now going to have a Monday, a Wednesday, and a Friday expiration. Monday, Wednesday, Friday. There are 3 separate expirations. Now, why do I mention options on futures? You're like, I don't even know what a future is, man. I have no idea what a futures contract is. That's okay. I'll teach you what the futures contract is. And then, then you could trade options on futures. Why? Because there's no day trading margin rule. Because the day trading margin rule is from the SEC and FINRA. Futures are regulated by the NFA, the National Futures Association, and the CFTC, Commodities and Futures Exchange. So you can actually trade anything you want with minimal amount of capital and as many times as you want in and out in a given week. That's how you get around it. Again, TheoTrade, it's the answer to your questions. Again, the bright probability, the options contract, closing the trades, what if the stock sells off big, what's the correct return for the strategy? If we rally massively, can you fix losing trades? We answer all of those by building definitive criteria, definitive checklists with each unique variable. You actually go through, what if we go up? What if we go down? What if we stay flat? You have to have recipes for every single variable. The how, the when, the why, at what price. It's just the beginning of the variables you're going to face, especially on an intraday basis. I mean, the secret, it's in the sauce. Everybody thinks to themselves, I could read about setups. Listen, you're right. Somebody's actually going to show you a setup, and they're going to have some crazy proprietary technical indicator, and it's going to have red and green flashing arrows over there. You can do this. Well, think again. You got to follow the strategy, the corresponding criteria. It's the utmost attention to detail. This quantitative approach took years to fine-tune, okay? When you approach these trades, you got to follow the steps to build a trade. Would you guys like the criteria to build the intraday trades? Of course, everybody wants it. We're doing a class on it, okay? The class is coming April 8th. Now, most people at TheoTrade, they're already aware there's a class coming April 8th, okay? And I'm going to explain this in some detail. I will be the instructor for this particular class. It will be a 3-hour class. However, the class that is on April 8th also includes, okay, an April 10th full live day of trading. Now, I'm going to do a few hours during the live trading day, but you're also going to get input from Doc Severson. You're also going to get input from Tony Rago. You're also going to get input from Jeff Bierman, okay? We're stacking the room. You're going to have approximately 5 full hours, okay? This is recorded. Not everybody can take off a Monday on April 10th. I get it. The whole thing is recorded. Don't feel like you're going to miss anything. And we will do live trades, okay? But the class takes place on a Saturday. Why? I needed 3 hours to prime you. The entire class is $197. And just to be clear over here, the class is $197, and everybody's like, well, it's $197. Yes, for the live class, which includes, it's all archived, you have unlimited access to it, you get the whole slide deck. The class is recorded, again, you can go back to the class 500 times if you want. addition to the class, in addition to the live trading, you're also going to get a number of bonuses with this. Call them bonuses. Listen, they're prerequisites, all right? To do a class of this magnitude, make no two ways about it. You got to get ramped up to it, right? So we gave you Options 101. Some of you guys have already been through Options 101. Just out of curiosity, almost everybody in here, okay, has done Options 101. Oh, I like this. Can you set an exit trigger while I'm at work? Yeah, you can. I'll get to that in just a minute. So Options 101, Options 201, okay, which is vertical and calendar essentials. It's just priming you. By the way, these are some long classes. You need to start watching them. These are available right here, right now. The class that happens April 8th happens April 8th, but these bonuses, you start watching them tonight. I don't care if it's like 11 o'clock in Eastern time. Nobody sleeps anymore anyway. So what's the fun in sleep? The Volatility Essentials class is pretty good. But in addition to it, I needed you to understand some futures. So we included Futures 101. This class just recently happened and just recently sold for 97 bucks. Okay? The options mini class. It's weeklies. This is a weekly options mini class. You had to understand weeklies before this because we're going to use weekly options. What products to watch and why? This is a 3-part series. This bonus class right here. I don't care how much experience you think you have. You need to watch this number 6 class, the what products to watch and why class. You have to watch that before. And last but not least, we have a Theo Quant, okay? Trade chart setup with intraday indicator for thinkorswim. If you don't have thinkorswim, that's okay. This is not an essential indicator. Okay? But again, I just want to display this, that there's indicators we're giving to you. All the prerequisites, we're giving them to you. Each one of these classes is over 100 bucks. We're doing this for $197 because we want your introduction to TheoTrade to be a good one. We do classes every single month, and we want to make sure that we do the classes, okay, to the best of our ability. Just go to TheoTrade.com/day. TheoTrade.com/day. Now, with all the bonuses and everything, and again, every one of these classes is available to you tonight, and the indicator, okay? There's an additional, and a whole package of indicators that's in here that we'll go over a little bit in the class, but the class is not essential that you have the indicators. We built them, okay? If you do not have thinkorswim, I will show you a way during the class to work around it. No problem whatsoever. But every one of the bonuses is available tonight. Let me take you through some of the curriculum. During the class is called Consistent Intraday Strategies and Setups. And by the way, yeah, there's a question coming up in here. So it's all recorded. So April 10th, if you can't make it like on the Monday, April 10th, then it's during the live trading session. So I start at 8:20 a.m., and we will then end at the close. The closing bell, ding, 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 it's over. And we'll record everything, okay, subcategorize it, and give you access to that. Now, here's the curriculum. How to create intraday trades, the probabilities on your side, okay, minimize risk, maximize return. How to analyze the markets so you can read and anticipate the market's direction. The option setups with detailed step-by-step entrance criteria. So we got to get to which option, okay? How the market provides predictable or manipulated ranges for every stock, okay? Now, some of this, again, we're giving you the prerequisites because some of this gets kind of in depth. Like this is a lot of material being covered in a 3-hour class. We're going to give you little known market insights and what drives markets to move in one direction so you can get on the right side of trade. You guys, I'm telling you, the what products to watch and why, that's a 3-part series. That alone is going to be worth 197 bucks. You watch bonus number 6 tonight and you come around tomorrow and email us and tell us like, holy crap, that was worth at least $197. This is a huge, again, primer for this class over here. The tools and strategies for analyzing market conditions is to trade with confidence in an intraday and how to minimize your risk, maximize returns, all right? In addition to it, this is continued curriculum, generate returns with a small account or a retirement account. You can do this in a retirement account if you have an IRA because you're only going to be trading calls or puts. That's it. We're not going to use spreads on an intraday basis. Which stocks and indices make the best candidates for intraday trading? Obviously, the spiders are going to be a good one, okay? What strikes and expiration do I select? when to open, when's the best time to close, all right? What market correlations do we watch over there? Literally, the market correlations. And some of this is going to help manage your longer term investments over there. And literally why intraday trading doesn't have to mean glued to your screen all day. Again, I don't mind telling you, I do sit in front of the screen 6.5 hours a day. Okay, today I left a little bit today, came back over there, and what really some of the best times of the day for intraday trading. So you can really get a good setup and a good jump on the day. Now, to continue on with this, and I will answer, I see a ton of questions coming in. So, by the way, the bonuses, again, everybody keeps asking about the bonuses over there. We'll give you a link to thinkorswim, no problem over here. The products, again, tonight, like literally, if you want to see how crazy cool this class is going to be, just check out what products to watch and why. Because I just reviewed some of the class in the last few days over here. This was a session did a while ago, and it fits perfectly into the class, and it's the best primer for it. But I'm going to tell you right now, if you watch bonus number 6 and you think you know about the markets, this one's going to be shocking you. But in addition to all of this, we offer an alternative. Would you like to access, all right, to every class we have ever done? TheoTrade, we do at least one class per month, at least a class per month. We will give you access to every class we've ever done, every indicator we ever had, and access to every class we will do for the next year. And it's what we call, all right, TheoTrade kind of curriculum. And here's what's actually included in the TheoTrade curriculum. Just go to theotrade.com/day. If you want access to just the one class, it's fine. The one class still comes with all 7, bonuses in there. Or we will offer you, okay, it's $997 for an entire year. These are some of the classes that are already in the archive. So you can go, well, here's the 101, 301. There's actually a guide to selling high probability spreads, a risk twist class, surviving extreme volatility. You might want to watch this one. Even those of you that have some experience, you might want to watch this. And by the way, there are many of you that are tuned in right now that are members of TheoTrade. You don't have to pay. This class is coming up. Like if you're a member of TheoTrade, you have access to the coming class. You have access to all these different, classes, all right, that are prerequisites over here. Iron Condor class, sell premium managed risk, covered calls class, essential skills for consistency trading class. This is also another big one. I think this is a wonderful prerequisite for really trading in general. This is about trade logic, huge class. This is the weekly options class, a butterfly class, the pairs, dun, 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 the final frontier. We also have classes in technical analysis 101. We have technical analysis, 201 out there, fractal energy class, which is Doc Severson, the RSI class, which is Doc Severson, Planner Gets Slaughtered, which is Doc Severson. By the way, some of the technical analysis classes are Jeff Bierman, some of them are Doc Severson. We've actually got a futures class in there as well. Ooh, I didn't even list that in here. Tony Rago's Nasdaq Futures class is in here. The Small Account Trading Workshop, Top 10 Skills for Growing a Small Account, the Whale Workshop. By the way, there's this and a lot more. I know it's totally overwhelming to look at this. It's $997, whatever. It's $1,000, for an entire year. And it gives you every archive that we've ever done. And it's again, pretty spectacular way and entrance into TheoTrade. So here's the actual site to sign up for. And again, theotrade.com/day. It's $197. It's a 3-hour class. Or check out, again, what we call Total Theo. It's a 12-month mentorship. By the way, when you sign up for an entire year, you can email us. You can ask us as many questions as you want. We're in the chat room live. Just so you guys know, here's the chat room right now. Here's the chat room right now. And by the way, hey, if you're in the chat room right now, you want to give any comments, these are all current members of TheoTrade. They're chatting right now because they're able to watch this live inside of the room. This is where the classes take place. You're like, what do you mean? This is actually the room. It's a video player. You can even maximize it to a full-size screen. We stream in 720p. So again, and if anybody wants to put something in, this whole chat room right now is live. All right, don't forget Slim. So yeah, of course, don't forget Slim, Steve Miller. The guy's got 43 years of experience in here. And again, this is unfiltered. These people can write anything they want about TheoTrade live in here. And there's a lot of people in the room right now. I mean, we have, now thousands of members that are in the 12-month mentorship. And a lot of people always question, what else can you possibly buy? Listen, it's $997. We do not charge you extra for indicators. There's no additional charge for an indicator. Okay, we give that to you. There's no additional charge for like some coaching. We give that to you. There's no additional charge for anything. Every single class, is involved here at TheoTrade. And I know it's kind of overwhelming. And additionally, we even email you out trade ideas. So while you're learning this, if you need, we'll email you out trade ideas. We do it all the time. We just did a trade on, TLT the other day. Emailed it out, closed it. We did a trade on Spider the other day, closed it. We've actually got a whole strategy being emailed out to you called the flyby, there's actually good comments in here. So worth every penny. Sweet. This is kind of cool to broadcast it in here because, don't forget, you'll get a daily dose of Don's sarcasm. Yeah, there's a lot of sarcasm I'm going to throw at you too. I hope you guys don't mind. I mean, we took a lot of time. I'm a much more quantitative trader, and I surrounded myself with chart geeks, market technicians, right? So Jeff Bierman, Doc Severson, Slim Miller. Slim Miller's in the cyclical analysis. If there's something you guys need, we're trying to provide everything that you need for an entire year at one cost because, oh, look at this. You spent $43,000. By the way, I just want you guys to know this is live here, so Vicky is not being prompted, all right? Although I'm sure I've emailed her a number of times over there. Tony Rago and his futures class is in there. Oh, the sarcasm is free too. Nice. Thank you, Mobius. By the way, Mobius, who is in the chat room this evening, he happened to actually build the indicators that you will be presented with after enrolling for these classes. So Mobius actually builds many of the indicators. We do some pretty rigorous testing over here, and those that make the cut, boom, they go to everybody, it's been phenomenal for us. So I always give credits due. And Mobius, by the way, is not employed by TheoTrade. He is but a client that I've known since I was at thinkorswim a long time over there. So let me answer a couple of questions over here because I think that's fair. And again, I want to put the address up there. It's theotrade.com/Dave. You can email us, support@theotrade.com. By the way, that email goes directly to me and everybody. Like everyone at TheoTrade sees every email that comes in. It's support@theotrade.com. There's also our phone number. You got questions, email us, okay? Email us for it. Anyway, let me answer a couple of questions that are right up front over here.